Ira Epstein of Linn & Associates with your metals market update for this Monday, and we're at the 11th of March, 2019, and just after 3:30. Before I get any further, I'm going to have a live webinar, and it's going to be held this Thursday, and it's going to be at 12:30 p.m. I believe we're on Central Daylight Time now. I think we switched Saturday night. So 12:30 p.m. It's by invitation only. For those of you in my mailing list that I haven't called out, you should have gotten your email invite this morning. If you did not, you'd like to attend, well, it's about 30-45 minutes long. You can give us a call at this number. We'll send you out the user ID, well, actually, it's a password that you're going to need. I've already got it established. When you sign up, you get another email right behind it with the password, and there you go. Seating is very limited, so you might want to be certain that you get that. And we'll try to cover ETFs, the futures markets, whatever you bring up. You make the webinar, if you will, last as long as it does. I tried my best to get to all the questions, and ideally we talk about charts and so on. So in looking today, you can see the gold's down, the silver's down, the palladium had a roar to the upside. I did some weekend work on the palladium, and it hit its target numbers last week within, I think, 30 cents, and I'm talking 0.30, and it just zoomed today to the upside. Platinum's still looking better than the gold and the silver, and the copper market trying to hold on to a bit of a gain. We know that we saw today Boeing drag the Dow down, but the other stock indices were strong from the get-go, and they stayed strong. And then late in the day, even Boeing came back a bit. As you look at the weekly chart, you can see you're in a corrective mode. Now, will you make it to the 18-week moving average of closes in the 1278 zone? I don't know. I can tell you that when a market's over the 18-week average on a weekly chart, the bias is still up, but you're in a corrective mode. You don't need me to tell you more than that. When you come down to the daily charts, what you had is a market that got caught between really this low, this high, played around a bit, and then broke out to the downside. Now we've got a stall in the market. An inside day is often a stall. Inside means you did not take out the prior trading days, which is Fridays, high or low, and you closed in the middle of it. When I put the swing line study on the chart, you're not trending. By the way, you're also not trending to the downside now. You have a lower low and a higher high. That is not a trend. The market is caught temporarily, and it hasn't challenged the lower 100-day average at 1275, with resistance at 1370, the 18-day average of closes. Where the market's caught support was the lower Bollinger Band. Now, I realize it first hit it back here, and when it hits it, I often say in these tapes and teach, that is where I think the pros are taking their first money off the table. Why? Lower highs, lower lows, you hit an objective. That doesn't mean it can't go lower. But that's where I think the smart money was taking its first money out, and they didn't look too bad after you look at this rally right here. You're not going to catch the low or the high. You know that. You're trying to catch something out of the middle. So right now the market's stuck. You've got the bias down because you're under the 18-day average. You've hit a lower Bollinger Band, and you've gotten a rally off of that. Now we go to what's momentum doing, and here's what momentum is doing. Both numbers today settled under 20 that make up the slow stochastic. There's two lines. The whole difference in the formula between the lines is because this is a daily chart, one uses 3 days worth of values, the daily values, the other uses 5. That's it. That's the difference as to how they plot it out. On Friday, both numbers were under 20, and both under 20 on Thursday. Both under 20 the day before, not the day before. So we already had through Friday, Wednesday, Thursday, Friday, what's called an embedded reading. The numbers were there. Until the red line closes back over 20, I say that we've converted the momentum from oversold to locking in a bear trend. Now, if you lose the embedded reading with the number closing over 20, the K line closing over that, that often portends a move back to the 18-day average of closes. You don't have it yet, so the bears have control, and because you're embedded, it becomes the number one, in my opinion, factor on the market. Until it's lost, everything else means nothing to me in terms of resistance points. That is the key to the market. When I go to the GLD ETF, first thing I look at are what are the values. So the values here, both are under 20. If we go back to Friday, both under 20, and both under 20 on Thursday, and both under 20 on Wednesday. So we have the same thing. Get the red line to close over 20, close, not intraday. Well, then I'm going to look for the 18-day average. Barring that, this chart's a little more bearish than the futures in that it's got the lower highs and lower lows already in place. What do I think here? Well, if the market's dropping, you could get back to that support zone. Lose the embedded reading, you might get up to the 18-day average. But to get there, to lose the embedded reading, you might also end this bear leg, because you could end up with higher lows and a higher high. If you get over 122.89, that puts the 18-day average fully into play. The strongest of the group has been the GDX. Partially because we know that Barrick, Newmont, we heard that there were bids of takeovers, and when you hear there's one group, there might be others. So the gold miners came alive before this. You can see the higher lows, higher highs. You went to the 18-day average on Friday, and you've pretty well stalled out there. Is the market going anywhere? Well, right now, the settlement's under the 18-day average. Momentum had gotten oversold. It's correcting a little bit. It's not a stellar-looking chart. The gold-silver ratio is getting a correction where silver is starting to pick up on gold. Now, the last time we did daily charts, I think, I had mentioned this 85.5 level. If you come across the chart, you've been here and failed at that number a bunch of times in the past. You know, I have to look that when a number fails at a zone, why won't it fail there again? That's just the way that you look at a chart. So if that's a failure zone, well, why not get back to the 84.14 level, which makes silver a little bit stronger than gold? When you look at silver at these current prices at least, you don't have an embedded reading. You have an oversold market that's had a pattern of lower highs, lower lows. It has found some support zone in between the Bollinger Band and the 100-day average, and it got over that on Friday and managed to stay over it today. Now, you can see both numbers right now, or one number rather, is over 20. If I go back to Friday, both numbers were under 20, both under 20 on Thursday, and both under 20 on Wednesday, both under 20 on Thursday. So it's important to know by the settlement if that's over it. If it is, the only time you can re-embed without going through another several-day process is immediately by opening lower tonight and dropping that number down. The higher in the range a market settles, on a day it loses an embedded reading, if it lost it, the more prone it is not to get it back. The lower in the day means it was just, it took a sneak look at it and then it comes down. So if it settles anywhere near that, I'd be looking for the market to fight a battle there, trying to come up a little bit. In the copper market, you've stalled out against the 18-day average of closes. You had been and still have a pattern of lower highs, lower lows. Momentum is down. The bias, if you look at where the market's at, is up because the current price is over the 18-day average, but you've stalled out against that number. In the platinum market, you have a market that got down, made a new low for the move, managed to come back up in an oversold area. But it's what I call one of these vertical price breaks. Let's assume you're bearish. Where do you put a stop? You're going to put it way back up here over the 879.90 level? Well, that's great. So you're going to risk approximately $3,000 a contract? I don't think so. I call this a non-tradable event when that happens. Now, in the palladium market, if you take a look at what went on with this market, it got within, you don't have to hit the 18-day average, you get close to it is my rule. And if you take a look, you had lost the embedded reading back here. So when that happens, I look for price in the 18-day average to make a run at each other. I call this a pretty good run at each other. I think it missed hitting it by 0.45 of a cent. And then it held like that, and you can see what it's doing. It can still hit it, but you're playing for the last penny if it's a contra-trend trade. The market's gotten itself out of overbought territory. This has been the strongest of the metal markets. Look at how you haven't been under the 18-day average in all of 2019. If you get over this number of coming up here to 1510, you negate the downtrend. I'm not saying it's going to negate it. I'm just saying you've already hit an objective. The market seems to be running out of steam. And in the dollar index, you got up and over the Bollinger Band this day, and I warned, I said, be careful. These markets have to prove that they can push out this sideways action, and it couldn't. It just came roaring back into it, overbought, in an uptrend, a lot of resistance at the upper Bollinger Band. Plus, if you look at that number and you go back to the other highs, you got a problem in that high 97 zone. Run your weekly chart. You'll see that what I'm talking about in that 97.50 area. But there's no reason yet to be bearish. The trend is up, the bias is up, but you are overbought and you've hit upside targets. I'm going to be holding my live webinar this Thursday. And in that webinar, and it's at 12:30 p.m. Central Daylight Time. We've changed our time zones. I think I'm right here with Central Daylight. What's going to take place is you get to ask questions. You get to bring your questions. I do my best to call up a chart with what you're asking about, and away we go. We review together. So for those of you that take my morning subscriber video, I'd love to have you in this. You can ask all the questions you want. It's an invite only. You can't go to the website and just show up on it or somewhere else. When you sign up with the invite that I send you, you'll get a password that is sent out by a separate email. That's what you need to come in. I start pretty prompt at 12:30. We end 1 to 1:15 in the afternoon, depending on how many questions you have of me. If you didn't get your invite, and they were sent out about 10:30 this morning, call my staff. They will be certain to send one out to you. 866-973-2077. I'm Ira Epstein. Have a good day.